Alright, here we are at case studies part number 3 for the Dormant Volcano setup. You understand what we're going to be doing here, so let's just hop right in. So for our first example here, you can see down here we now have another example where it's literally 0.00, but it is 0, and that's fine for our criteria. Let's look at the excitement gauge here. You can see it's kind of was going up and sideways and then back down. So if we scrunch that up a little bit more, you can see that overall theme of it is just pretty much going, there we go. You can see it's been going down and then kind of just wobbling around here a little bit, but within the grand scheme of things, going down. So we have a dormant chart set up. And then when we look at the 20 period relative to the 50, for me this is just, it's too early. Yeah, we got our first sign here, but this, I'm not even sure you could really call that. First off, there's just too much space here. Second, I wouldn't even call that a crash course. So at this point, the trade would need to, not the end, but the stalking would need to, or the hunt would need to come to an end. And you would just, again, like I said in the other video, if you wanted to make kind of a subset watch list that says maybe not quite there yet, or getting close, or however it makes sense in your mind, you can do that. But you could add that onto that watch list, and then let's just see what happens with it. In particular, because the one thing that's keeping us away from the trade right now is the action of these two moving averages. So let's just see what happens. There you can see a nasty day. And then right here, this is where things, now you can see they've become much closer here. And now you can see there is a crash course that, you know, looks like it'll be taking place here. So now at this point, and I should note the signal line is now above 0, so it's gotten stronger from this indicator perspective too. So at this point, you would be justified, and I would totally agree with you if you wanted to now set a trigger point. Now maybe you see it without me even bringing it up, but we have our pink line here once again, which is the 200 period simple moving average. And you can see, just look at the history of this chart. Acted as resistance, resistance, resistance. When the price did get above it here, it did go on a nice pop. So keeping this in mind, when the price was able to break above it, it went on a nice little move there. That's what I would be kind of planning for the trade in terms of general chart knowledge. So my trigger point would be the 200 period, and then my profit point would be right here. And I know that's not much distance, but again, previous chart history shows us when it breaks it, if it can break it, it can go on a quick little move. So my goal would be, if it can break, I'd like to try to capture some profits right here. I know that's not much, but for the initial profit lock point, that makes a lot of sense. So right there would be my first profit lock area. So let's see how things unfold here. Next day there, nothing. If you still needed a little bit more convincing in terms of the moving average, you can see now they're even tighter in space, and crash course right here going to happen. And then right here, big candle. So would have been initiated into the trade there. Would have hit the first profit lock target there. And again, for somebody like me, I would have probably been stopped out of my next profit lock area because I can monitor the trades. I would have put it somewhere right up around there. So you can see, based off of these resistances right here, I would have been hit again. But let's assume that you don't have that, you aren't able to monitor or sit at your computer all day. So you come back to your computer, when you get home from work or whatever, and you see this candle, you're like, all right, that's awesome, great, my first profit lock point's hit. The next area you could do would be kind of up here. As you can see, it gets kind of wishy-washy. There's all sorts of wicks and shadows and stuff like that. Or you could just leave it right here. So let's just let's get a little bit more. So let's say you move it up there for the second profit lock point, and then let's see what happens. So this was a relatively crazy day. Let's zoom in so we can. So the price actually gapped down here, and kind of hard to see, but right there actually. So the 10 EMA on this day was valued at 38.41, and the low of the day was at 38.39. So right there, again, 10 EMA value 38.41, and the low was 38.39. So if you're the people that don't use a cushion, you would have been stopped out right here before this continued move up. If you do use a cushion, hopefully use one more than just a couple pennies on a stock above $38. So let's just say you at least use the nickel, then you would have been okay. But great example here of why you need the cushion in there for the stop loss. Of course, the 20 SMA people, they had no worries there, but still in the trade. And then depending on the stop or the profit lock strategy. So for me, I was very aggressive, so I would have been stopped out here and here. But if the people that want more on their moves, they could have had their first one here and they would have been fine, and then their next one, up here in this area, and they would have been fine still, and they would have had 2 good plays. Now keep in mind, the way I would have done it, I would have already been out of both of my profit lock points. But this just goes to show that, with a little bit higher risk in terms of where you're going to put your areas of profit lock points, you can still have some very nice, or it can pay off. It's not always going to pay off, of course, but in this example it could. Heck, you could have even gone, let's see, just out of curiosity, that high was at 39.61. This high was at 39.6. I love charts. Look at this. Beautiful job of predicting where that resistance was going to be. So had you put it right there, maybe you would have gotten your shares filled. It really just depends on how many shares traded hands up at that level. But anyways, point being, you could have put it anywhere around here, and for those higher risk profit lock people, and they would have been fine. And then you can see the next period there, 10 EMA people are out. So really, let's see, did it even? It did get up above our entry point, so that's good. So the remainder of the shares would have been stopped out for just a little bit of a gain. But then again, you could have always locked in some more profits after this crazy move here. But had you just held on, and then let's see where the 20 SMA people are at. You can see there, got pretty close, but held strong. And then you can see 20 SMA people have actually done really well, and actually, well, I use this example, and at the time of filming, that's where it's kind of petered out at. So as far as this example is concerned, the 20 SMA people are still in it, and they are now doing very well compared to the entry point down here. So yeah, I guess I should have probably mapped that out a little bit so we could see the end of the story, but this will just have to remain like kind of a good movie that just randomly ends. There is no ending to this one for the 20 SMA people, but the example still served its purpose. So let's move on to the next one. So you pull up this chart, and all right, step number 1, all right, that is at 0.01, good deal. Looking at the excitement gauge, clearly heading down, so we know we're in a dormant setup, and you could really just kind of look at the price action to see that it's been going sideways. So dormant, get some rumblings here. And then in terms of the 20 SMA, you can see it has crossed up above the 50. So we are straight up in bullish. Don't even need to be speculative bullish. So we are all good to go there. So we are ready to outline our trigger point. So once again, you can see this pink line here, the 200 period simple moving average. Given that the price is now starting to pull up above it, it really makes no sense at this point to now make that the trigger point. I'd rather see if it can now start to separate itself from it. So in order to see if it can get some separation, a couple different areas. Out of curiosity, no, I would never do that one. So you could do this one right here, and that's what I first started off with, and that would be, that would be justified. But that's a little too close for me. Up here, that's a little too far for my liking. But I'm a big fan of middle ground. So right there, at the high of this candle, that'd be middle ground for the trigger point. And then with the trigger point, or excuse me, not the trigger point, the profit lock point, we now need to get that one into place. We are once again dealing with one of these gaps where if it can separate itself from the 200-day, the next level, because of this gap down right here, of resistance is going to be right up here, because this was a level of support. So yeah, maybe a little bit more aggressive than what is the norm, but again, using general chart knowledge and that of gaps, you can see here it makes logical sense. So that's where the first profit lock point would be. And I should know, I don't think I've said this in any of the other examples, for me, when I get a little bit more aggressive on the profit lock points, then there is no question that I'm selling half my shares up here. Once in a while, I'll do just a quarter, but when I'm looking at this and thinking, well, this is pretty aggressive, I am no doubt selling half the shares. You may look at this and say, what are you talking about? That's not that aggressive. I want my first profit lock point up here or something like that, and that's fine. But that just shows that trading is a game of personality. And but for me, I look at this as pretty risky in regard to the first profit lock point. It makes perfect sense. That's why I would do it. But on the same note, I would also certainly be looking to sell half the shares up there. So let's see how this all plays out. Next day right there, potentially filled. right there though for sure filled. Actually, it was a minor gap up above the point, but that just goes right there. If it gaps up above it, trigger point level becomes the entry point level on any sort of pullback, and you can see right there pulled back, so entry right there. Again, just waiting now to start to get some upwards move. Potentially getting shares out right there. As you can see, it went up there, but let's give it another day. And right there then for sure, first profit lock point is hit. So at this time, we now need to establish our second profit lock point. Again, because this one was already pretty aggressive, I'm going to keep this second one relatively close. So I'd probably put it right up in that area there. So there's the second profit lock point. You can see there goes all the way up there and close. I don't know if it would have hit it, but you get the idea, right around there. And then right there, 10 EMA would have been out. So this is one where actually just I'm curious. So I would have put it right there based on the low of this candle because that was a level of support. And that low was at 66.22. So let's see how high it actually went on this day here. It went as high as 66.20. Oh, okay. So I would not have been, my second profit lock point would not have been hit right there. So it looks like it was hit, but when you look at the numbers, I would have been 2 cents short. So no hit there, and then I would have been stopped out here. But the one good thing with that is our entry point was down here, and the 10 EMA had moved above it. So this is just a single or double. This is not a home run, but this is what happens. This is why we have our profit lock point. So again, with this, I want to keep reiterating this in the spirit of not coming across like every single one's going to be some gigantic mover. This is what you can expect. And then let's see where the 20 SMA people. Right there, they would have gotten pretty much broke even then from the entry, because by the time they would have been stopped out, it would have moved up right here to the entry point. So for this one, certainly the 10 EMA was better in this case, but just a pretty simple and straightforward trade, not a gigantic winner. And that's just how some of them are going to be. We want to get on base with singles and doubles, and then just sit back and be patient for the big home runs. So for our next one here, step one, looking down at the signal line, that is at 0.01, so it's just getting above zero. Looking at the excitement ruler, pretty darn obvious, so we are dealing with a dormant. And then what is the status of the 20? You can see it is above the 50, so we are good to go on all accounts of those first three steps. Now let's figure out our trigger point. So again, this one breaks down to how aggressive and what sort of strategy do you want to use. You could be pretty conservative and put it all the way up here and make sure that it clears out away from all this stuff. That would be fine and work. If you wanted to be a little bit more aggressive, you could put it down, in this area here. You can see there's all sorts of kind of wishy-washy action with this area too, so you wouldn't be wrong there. And at the end of the day, as I've mentioned before, a true volcano eruption, these little splitting hairs here thing isn't gonna it's not going to matter, because a true eruption and true breakout, it'll be a winner for everybody. But for me, I'd probably want to just see it if it can break outside of the top of this channel. So I'd be a little bit more. I'd put it up here. So this would be my trigger point area. And then looking at this, looking back, my first trigger point area would be right around here. To me, that makes a lot of sense. You can see acted as support here. When the price fell below it, then turned into resistance. So right up there would be my initial profit lock point. So let's see what happens with this one. Next day there, you can see price starts to creep up, but still no trade initiation. Maybe if you had your trigger point down here, you would already be in the trade. And then you could potentially be out of the trade already with it hitting the 10 EMA. That's, the risk versus reward. If you're getting it a little bit too soon, you could get, kind of wiggled out here. And then again, there is the entry here for the top of this channel, so the trade would now be underway. You can see starts to head back up there, staying above zero, so we're all good. Our first profit lock point still hasn't been hit though. And here is actually where it would have gapped up here and filled the profit lock point, maybe even a little bit more. But that would have been the first one hit, so at this point, we would still, of course, be in because it's above our stop loss moving averages, but we would need to find another one. After a day like this, I would be pretty aggressive thinking, well, geez, it pretty much just petered out. So to be honest, I would probably just leave it right here and look to lock in more profits right here again. If you wanted to, you could move it up here to one of these areas that acted as support. But after seeing a day like this, I would probably leave it at the exact same spot that it already was. So I'm going to leave it right there. And it wouldn't have mattered because next day I would have been out of the trade right there. 20 SMA people still in. Let's see how it works out for them. Potentially right there, depending on how liberal they are with their cushion, but regardless, good example of why a cushion is needed. And then right there would have been stopped out on this nasty little gap down day there. So again, you can see that it worked out. Areas were hit in terms of that first upwards move. However, it just ran out of energy. And take this as an example: honor your stop losses, because you don't want to get in stuff like this. So at best, for me, being I like to sell half my position, it was probably a small gain. At worst case, a break even. For some it may have been just a flat out loss, but just keeping things realistic. That's how it is. That's why we were aggressive with our profit lock points. We have to hedge against moves like this where they're just temporary and then they pull back down. I mean, there's still money to be made here, obviously, with these quick upwards moves. But if we want any chance at hitting the home run, then we have to at least hang on to some shares. But at the same time, in order to hedge against these moves that come back against us, that's why we have our profit lock places put into place. For our next one here, you can see MACD well above the zero line at 1.20. Looking at the excitement gauge, going down right here, kind of going up here. So what was it doing previously? Okay, you can see there's a nasty move to it now. So this is still a dormant chart setup here. It's obviously made a move, but again, we want to make sure that this isn't just some sort of dead cat bounce that we're getting stuck in the wash. But we are hedging our bets against that because we have that above zero, so that's good. In terms of the 20 SMA, you can see that although it's not above it, to me that's a pretty, when you have triangles like this, kind of like a wedge pattern. So just think back to what a wedge pattern looks like. When you have a wedge pattern, to me that's always a pretty good indicator of a crash course. So nice wedge pattern here, triangle, however you want to picture this. But it seems like those are going to be crossing, especially when you had a move like this. So in terms of trigger points, again, maybe you've already seen it. Let's zoom in some more. But we have our 200 period simple moving average that always needs to be monitored. And again, you can see, I can't remember if it was this video or the previous one, but when the price does get above it, you can see the chart history tells us that it'll go on a nice little pop at least. So we'll use that here in a second. So trigger point will be 26.51, and then keeping in mind about this kind of tendency to pop. If it can break the 200-day, let's now put into place our first profit lock point. So again, because we know that it has a tendency to pop, let's just put it right up at the top of this area for our first profit lock point. So if it can break there, I'll want to just try to get up some profits there just in case it decides to roll back over like it did here, broke, and then came back down. So that'll be, that would be my thinking on it. So this will be our profit lock point. So let's see how things unfold. Next candle there, you can see it goes up and gets us filled. Our 20 or 10 EMA people there, 20 down there. And then right here, very nice move. So depending on your situation, maybe you would have gotten out on another profit lock point. But as always, we'll assume that you were not around. So let's figure out our second profit lock point. And given how strong that was, you could make sense to put it up there. You can see was a level of resistance there, support, and that's where it came back down. So putting up there, that makes perfectly logical sense. See if it can retest that high, and if it does, that'll be the second profit lock area. So let's zoom back in and see what continues to happen. And there you can see crash course. Still haven't crossed yet, but when you had that triangle, it was really just a matter of time before this sort of action started to take place. Potentially maybe got filled right there on that red day. Right there for surely would have got filled at the second profit lock point. So at this point, both profit locks have been hit. We are just riding shares and hanging on to see if this can be any sort of big winner. So right there, still just hanging around. I should note 10 EMA is now above the entry point. So worst case, 10 EMA people still making money. Right there, get a nice move upwards. And then right here, boom, that's what we want. and then another big move right here. So again, I know the first few examples in this session were pretty mild, but they were still potential winners, if not just small winners, small losses. But when we're putting ourselves in the context where moves like this can take place, one move like this can really wipe away quite a bit. So just a great move here. Let's see how things play out. So 10 EMA people were out right there. However, seeing this sort of big move right here, I know I would have for sure been selling another 15, 10% of my shares up there just to lock in this gigantic move. 20 are still in, so let's see how they would have ended out. Still in, and then right there would have been out at that point in time. So all in all, though, great move. Again, found the volcano, and looking back in reality, all we did was we pretty much played, a little bull pennant pattern, bull flag pattern. The strategy led us to find in this little area here, and then we were able to capitalize when it broke out of that pattern right there. So all in all, follow the rules, and eventually, you'll come across big winners like this. For next one here, look down here, 0.02, beautiful, above zero. That's what we want to see. Looking at the excitement ruler, 50-day or 50 period simple moving average, clearly down, so we are dealing with a dormant setup. However, when we go and look at the 20 period, to me, I don't know. It's not as obvious as what I'd like to see it. So, I'd probably put it on like a sub watch list. So let's just go through right here. And as long as it stays above zero, then there's always a chance. But now right here, you can see, look at the space. These are so close. Now they're about to cross. So at this point, it'd be worth putting it on the watch list and, then moving on to the trigger point stage. So for the trigger point, depending on how aggressive you want to be, if you want to put it kind of down in this area here, that'd be fine. And then you could put a tight little aggressive profit lock point right there. And this area was taken from, you could see it was a support here. I would rather just see it kind of clear out of a lot of this noise. So I'd put it right there as my trigger point up at this previous high here. And I'd also be planning on, all right, it looks like I'm going to have to, wait this one out a little bit. My trigger point's way up here and the price is down here. So I wouldn't be expecting, to get in this anytime soon. I'd expect a few more periods would have to go by before I'd have any chance of, hopping in. But so after that, kind of establishing my mindset of, all right, I'd probably have to wait a little bit anyways. Then I'd want to move on and figure out my profit lock point. So for my first profit lock point, right here would make sense, but that's even too tight for my liking. So I'd move it right up around here. You can see it was an area of resistance over here, so that would be my profit lock point. So let's just see how things go. You can see there, still nothing. 20, they're just totally get on a crash course there. There is the 20 actually crossing above the 50. And as expected, I'm having to wait a little bit while before this chart would even come into play. But there, all of a sudden, it comes into play, so I would be into the trade right there. Next profit, or first profit lock point up there. And then right there would be hit. Depending on the situation, if you can monitor your trades relatively often, then you'd be able to probably get a second profit lock point here. I know I would have, but let's just assume that you're not. So you come back and this is what it looks like. So for the next profit lock point after this, I'd put it right up here. Considering all this is taken, I'd say, yeah, if it can creep up a little bit more to this area, that would be solid. So let's see what happens next. And then right there, second profit lock point is hit. So that's kind of the people that can't watch it all the time, they do have an advantage too sometimes, because people like myself that are around, I would have sold my second profit lock area down in this area of the chart, whereas them, if they don't have that ability, then they would have had to come back and readjust, and they would have gotten a better sell point than me. So as is the case with anything in life, like I've already said during the lessons, everything has a trade-off, and that includes however your time schedule is. Sure, sometimes you're not going to get the best sells by not being around all the time, but at other times like here, you're actually going to get a better sell. So I figured I'd clear that up and throw that out there. So let's see how things, so there's another opportunity to clear some profits up there, and actually one more time right there. 10 EMA is now well above the entry point. 20 SMA is now just there, so 20 SMA people are worst case now also just breaking even. and then you can see there really just falls apart. So 10 EMA out there, and then 20, pretty much a break even on those shares from the entry, but a very nice score here and a very quick one. So, but again, this was probably looking like a potential home run here. Maybe you're thinking, oh, Clay just put in another one that's going to be a home run, and then all of a sudden that happens, totally just falls apart. So that's why we got to be aggressive, and that's why we got to lock in those profits. All right, here we are looking at the MACD signal line, 0.09, well above zero. Let's take a look at the excitement ruler. You can see 50 period is going down, so we are now in a dormant setup. What's the status of the 20? You can see the 20 is now crossing right over the 50, so we are at bullish, and it is already ready to now have a trigger point put into place. So to me, this one's relatively straightforward. I mean, there's a couple different areas, but again, as long as you have some sort of trigger point based in reality, I would put it right here. You can see resistance and then resistance once again. So right here would be the trigger point. Now let's map out our first profit lock point. Now again, we're dealing with a gap over here, so if you wanted to be super aggressive, you could have put it right there, and that would actually be logical, since that is the bottom of the gap, and that's where I would put it. I could see some people saying, I understand that's the bottom of the gap, but I'd rather have it be up here in this area, and that'd be fine. I mean, you're just more of a risk taker than I am, so I would have my first profit lock point right there, just because again, we're dealing with a gap there, and this would be the bottom of that gap area. So that's where my first profit lock point would be. Let's see how things play out here. So after this period, green candle, but nothing in there. And then right there would be entry into the trade. And then right there, maybe I would have gotten hit. Let's just give it one more period. I can't remember what happens here. So maybe again, pulls back some, and then goes back up. So right there for sure would have been hit. And again, 10 EMA doing its job right there. And of course the 20 SMA is. But with that being the case, now we would now need to find the next profit lock point. At this point, I'd move it up around here. You can see here this was previous level of resistance there, so this would be my next profit lock point. So let's see how things unfold here. Again, let's zoom in. Out of curiosity, let's see, 10 EMA. 10 EMA's value was 64.99, and this low was at 65.02. So actually didn't even hit it, but pretty darn close there, but still in, still hanging on. Again, EMA value 65.09, and the low of this candle 65.11. So pretty darn close again, but still hanging on. The power of the 10 EMA. And then here starts to separate from it again. Here close, but you can see still hanging on. And then right there, so gotta love that 10 EMA. It was close many times, but even for the people that didn't use a cushion, they would have still been in there. And then here comes this nice explosive move here. Second profit lock point is out. Now we're just in to ride some shares. And then that's it. So kind of anticlimactic. You would think that the party's just getting started. I mean, I could see people getting excited, and actually let's see where the 20 SMA people get out. Okay, they would have been out right there. But I could see the excitement building and thinking, this is going to be a great winner. And then this is what happens. But that's just part of the game. They're not all going to skyrocket like some of the examples. But at the end of the day, think about it. Got in down here, sold up some more, sold out of some shares here, sold out of the rest of the shares here, and then the remainder of our shares were still sold for a profit that we were riding for the home run. So still a profitable trade, not a grand slam or a home run, but still a nice volcano trade here where we were able to capitalize here on this little, I guess we could call it mini eruption. So for this one, look down here, 0.03, perfect. Looking at the excitement ruler, you can see the 50 period is sloping downward, so we know that we're dealing with a dormant volcano. In terms of the 20 SMA, although it hasn't quite crossed above there, you can see barely any space right there, so they are getting ready to cross. So this is now ready to implement our trigger point. Now, given the price range of this stock, one that is sub $5, what I would probably do is I would put the trigger point right there at 451, and then make my trigger point very soon thereafter. So let's get my profit point very soon thereafter. So what I mean by that is I just put it right there at that previous level of resistance. So the trigger point would be at, let's see, 450, and I'd be looking to lock in some initial shares right up there at 12 cents. So quick 12 cents, but a 12 cents on a sub $5 stock, not too bad. So let's see how this all works out here. Okay, so next period there, pushes up, breaks it, and would have filled me right there. So now I need to update my profit lock point. I could put it up there and that'd be, that would make sense, but I'm not that aggressive for a second. But I mean, if you're looking up there and saying, oh, that's where I would put it, then you just, again, have more risk tolerance than I do. I'd put it right around this area here. You can see kind of trying to split the difference between all this little whiplash action here. So that would be where my second profit lock area is at. So let's continue on the journey here. You can see there, nothing, but would still be in the trade. Right up there maybe would have gotten put in. But right here surely would have, and after seeing a move like this, I'm sure I'd have probably sold another 10%, 15% of my shares up there. But very nice looking play, pulls back some. 10 EMA still in. And then right there, 10 EMA keeps us in and gives us another chance at this. By this point, I probably would still just be hanging on because I would have already sold another section of my shares right here. By this point, I would have had about 25 shares left, so maybe I'd have sold 10 or 15 more. So I'd just be hanging on at this time because I'm thinking, well, if this thing is going to go to $7 or something like that, I want to at least still have some shares left. So I'm just going to follow my guide here. And you can see right there, would have been stopped out. 20 SMA people still in. So the 20 would have then had an opportunity to get, take a piece of this move right here because they'd still be in. And then have an opportunity at this upwards move right there before they would have been stopped out down here. And as the stock market is pretty cruel, look at that. Came down here and then shoots all the way back up there. But that's just how things go. As examples have shown, usually this is not the case, so don't base all decisions off of seeing this action saying, oh, I remember that one example in the course where, people were undisciplined and then they got bailed out by 2 gap ups in a row. Yeah, 2 gap ups in a row after a bloodbath usually doesn't happen. So just take your loss, or not lot. What am I saying? At this point, they would still be nice solid gains. So take your gains here and don't depend on, having some sort of move like that follow, because 95 times out of 100, probably 99 times out of 100, this is not normal price action. And then I wanted to end this session with just one more example, and one where up front I would not play this one just because this one makes me, it just doesn't fit my personality. It seems like it would just be too risky for my liking. But I also want to show that just because I wouldn't have played it and I don't really like how it appears, if you follow the rules, it can still put you in a good position to make nice money. So again, me personally, I wouldn't have done it, but the point of this example is to show that still following the rules, you can still make money, and it's all about personality and sticking with plays where you feel comfortable. I wouldn't have felt comfortable with this one, but if you look at it and say, yeah, I'm cool with that, I'm not scared, then that's fine. Then you could have made some money here, as you're about to see. So let's go through the steps here. You pull this up, and this action right here, I'd have said, nah, no thank you. But let's just go through the rules here. So you can see 0.03 is the MACD. The excitement ruler, you can see, kind of has an overall downtrend to it, so we are dealing with a dormant setup here. And then as far as the 20, sure it is below, but I mean this thing is basically going straight up right now, so straight up collision course right there. So that would be justified. Now it's a matter of figuring out where to put the trigger point. So the trigger point, I think it's when you kind of put it up at that high and then see, if you start there and then look back and see where it matches up perfectly with these areas, that would be a pretty darn good place, I think, for the trigger point. So trigger right there at 757. Now we need to have our first profit lock point. So I know I said I wouldn't have played it, but if I had, I'd be thinking, all right, this thing has already kind of made a pretty big move. So I'd want to be pretty darn aggressive with my first profit lock point. So I would put that first one just right up there, see if I could get a quick little burst and then cover some, or sell some shares right there. So let's see how it transpires. Here, nothing. Hanging up there. You can see now 20 has crossed above 50. Right there, pretty darn close. And then right there, actually gapped up above the trigger line right there. So again, let me zoom in some. Gapped up above it, so trigger line would then become the entry point if that's how you want to play it. So it pulled back, would have given the entry right there. So now the chart is in play. That next period right there would have been the first profit lock point. And now we would need our second profit lock point. As you can see, going back quite a bit of ways into that chart. I'm guessing if you were wanting to play this one, you probably have a pretty big risk tolerance. So I'm guessing your next profit lock point would have been probably up around here, if not up there. Let's just kind of split the difference and call it right there. So let's see how things would have played out then. And then that next move, boom, right there. And then bam, right there. So again, I would not have played this. I'd be lying if I said I would have, but you know, made a move, and it just shows following the rules. This was a volcano, and although this, you know, would have had me fooled thinking, well, it looks like the volcano has already erupted. No, sir, it erupted and then took a little minor breath and then erupted once again and went all the way up here. So then you can see it finally pulled back here. But from the entry point here, you know, from basically $7.50 all the way up to almost $10 in a matter of basically, you know, 2 weeks. That's a pretty darn good move there, and one where after making a big move like this, I would have been away, but you can still make money on it. So it all goes down to personal preference, and as long as the personal preference is falling within you know, the path of the rules. So remember the ninja pathway. As long as you're following the rules and you're still on the path. For me, this would have been, to kind of stick with the path analogy, this would have been too far left on the path. You know, I would have wanted something a little bit more towards the middle. So, but for you, if you looked at this and said, hey, you know, that's a nice little kind of bull pennant here that we had, and then it broke out of, you know, that works. But again, it all came down to following the rules and then just a matter of personal preference. So we have one more session of case studies, and then we will be done with the Dormant Volcano. So again, all about personal preference. And like I try to drive home in all the lessons in this one, they're not all going to be home runs, but you can see there's home runs out there like this one. It just takes a matter of money management and keeping those losses small, or if anything, just having small manageable winners too.